You announce you're going to spend $250 million and buy your stock back. You think it would move? Nope. Crickets. But the market had a week of notice. And then a week later, we stepped it up into the next gear, which is, okay, we're going to buy $250 million worth of Bitcoin.
$859,000. That's the price Bitcoin needs to reach for Michael Saylor to become the richest person in the world. Not counting the Saudis, of course. That's just above a 10 times jump from here. And Bitcoin has already made that 5 times in the past 15 years.
Watching history be made. Bitcoin is now up to $111.
Even Nvidia's stock achieved that level of growth in just half a decade. Only 4 years ago, Saylor thought Bitcoin was dead, but today, he's the single biggest known holder. So how did 1% of the entire Bitcoin supply that will ever exist end up in this random tech founder's hands? And could you or I pull off the same feats?
I can put all my money on my phone and zap it at the speed of light and no one can steal it from me, and I get rich.
Before he became the biggest Bitcoin podcast guest and the biggest audible sire on national TV,
explaining what is it?
Michael Saylor was your typical run-of-the-mill billionaire. Somebody who built a profitable tech company with a recurring revenue model, hosted a fair share of regular yacht parties, and dabbled in salacious mid-afternoon tweets like this one. We're talking about the guy who wrote The Mobile Way, a book that literally explains how increasing the number of users in a network leads to exponential growth and adoption. And he couldn't see the Bitcoin network coming?
If you think about it broadly, there's no example of a successful company in the history of the world that wasn't a technology company.
Well, by the year 2020, Saylor's vision was clear. He had started going down the rabbit hole, and in a true Bitcoiner fashion, he dragged everyone with him. He started first by assigning Bitcoin research to the members of MicroStrategy's board and told them to just keep learning. What they didn't know was that this research wasn't really research at all. He was preparing them for what was about to be the most ballsy financial maneuver in business history.
The company was looking at a fast death. We just sell the company and call it a day, or a slow death. So we were basically at a point where maybe we should take a risk.
And it all started to show in their Q2 2020 earnings call. Today, we are announcing a capital allocation strategy under which we plan to return up to $250 million to our shareholders over the next 12 months. In addition, we will seek to invest up to another $250 million over the next 12 months in one or more alternative investments or assets, which may include stocks, bonds, or commodities such as gold, digital assets such as Bitcoin, or other asset types. Basically, MicroStrategy was like Smog, sitting on a ton of depreciating cash and cash equivalents. About $500 million to be exact. And they needed somewhere to put it. Half went to the shareholders, and then 2 weeks after that, MicroStrategy made history by purchasing $250 million worth of Bitcoin. This was the first time a publicly traded company had ever bought Bitcoin.
Maybe you've been hanging out with your Bitcoin buddy too much.
And a month later, the second time, another $170 million worth of Bitcoin was added to MicroStrategy's balance sheets. They had hundreds of millions of dollars worth of Bitcoin by December. But as Justin Timberlake famously told Spider-Man,
$1 million isn't cool. You know what's cool?
$1 billion.
The only problem was that MicroStrategy didn't have $1 billion lying around. So what did he do? He borrowed over $500 million. Then, spent it all on Bitcoin. But he couldn't just borrow money from a bank. That would be far too expensive and outside of their risk profile.
I'm paranoid. It seems really risky.
So instead, Saylor decided to get investors to lend the money to him at super low interest rates instead. And in exchange, he'd also hand the investors contracts that could be converted into additional shares of his company. This type of debt contract is called a convertible note, since it can be converted into shares by the lender. This one financial instrument, the convertible note, was the final piece of the puzzle that stood between Saylor and $1 billion worth of Bitcoin. Of course, individuals can't borrow money like this. You can't offer shares in yourself. Don't even think about it, NFT bros. You gotta remember, back in 2020, when it came to money printing, the government was the dealer and the banks.
They're like a group of junkies who've relapsed and are going, "No, my man, listen, I just need some liquidity, you know what I'm saying? I just ran into some bad subprime, you know? I just need $805 billion by Tuesday. I would not fuck you again."
During this printing spree, Saylor figured out that he could borrow a depreciating asset with an unlimited supply, US dollars, exchange it for a hard asset with a limited supply, Bitcoin, and then pay back his debt once it had already shrunk. And the interest he pays on these loans doesn't even keep up with the inflation rate. So in real terms, he's quite literally repaying less than he is borrowing. Combine this with Bitcoin's rising price, and by the end of 2020, Saylor had made Timberlake proud. He had over $1 billion worth of Bitcoin. Did somebody say infinite money glitch?
Oh shit, here we go again.
To anyone with half a clue about Bitcoin, this whole idea is genius. But if you're not sold on Bitcoin, this might sound like one of the dumbest decisions ever made. Lots of people would see this move to be hardly any better than taking out a 9-figure loan and heading to the casino with nothing but a bag of cash and a dream. But when I say Saylor stood on business, that boy stood on business.
I stand on business. I stand on business first, bro.
Take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it.
And there's some nice benefits to buying with borrowed money too. On March 23rd, 2022, Silvergate Bank purchased $205 million worth of these convertible notes from MicroStrategy. But unfortunately, they were also way too involved with the debt of shitcoin companies like the mega exchange FTX. So in March of 2023, a few months after FTX collapsed, Silvergate announced they'd also be winding down operations, recalling any existing loans. When you're a bank and you want to control the money you lent out to someone, you don't always get it all back. And in MicroStrategy's case, it gave Saylor the negotiating power to only pay back $161 million of the $205 million they owed them, leaving Saylor with an extra $44 million for free. Can you guess what he did with it? Kidding, he bought more Bitcoin. Have you ever found $20 off the floor? Feels great, right? But when Saylor stumbles upon free money, it's not $20, it's $44 million. I think this goes without saying. That is not normal. How does the average person compete when people like Saylor are literally making tens of millions of dollars on accidents? Why is his financial agility so much higher than the average person's in the first place? Saylor has two things that most people don't: an advantage and an exploit. Debt has been the foundation of economics for a millennia. But if you borrow from the cartel and fail to pay off your debts, you get cut in half. They're the same with the banks, and they'll only cut your credit score in half, leaving you alive, but making borrowing money much more difficult. Even if you paid back every dollar you've ever borrowed on time, so long as you're not rich, borrowing money will always be expensive. The cost of lending is measured in risk, and the less money you have, the more risky it is to lend to you. So to offset the risk of lending to poor people, banks charge them more.
How much do you think we should charge him for this?
Lending and borrowing occurs within a section of the economy called capital markets. And there are two of them: primary capital markets and secondary capital markets. Primary capital markets are like the maternity ward of debt. It's where a new debt contracts, such as MicroStrategy's convertible notes, are born and sold for the first time. Secondary capital markets are where people trade these debt contracts amongst each other. If you buy a stock or a bond, you're buying it on the secondary markets. For instance, instead of borrowing $10 from Julian and legally owing him $1.10 per year for the next 10 years, I could just write a debt contract that states I just owe whoever owns this contract, and then Julian can sell that debt contract to Angelo, at which point my interest payments will go to him instead. Except, I can't sell this contract to the public without registering to the SEC.
This ain't fair. No?
This is the advantage that Michael Saylor has: access to primary capital markets. Since he can issue sophisticated debt contracts like convertible notes, Saylor's cost of capital is less than zero. When you adjust for inflation, he literally gets paid to borrow money.
Oh, yeah, I'd like that if you don't mind.
But people aren't stupid. They didn't buy $3 billion worth of these notes because they forgot about inflation. Inflation is one of the main reasons why they do buy the notes, which leads me to the exploit.
You can have any inflation rate you want. As a practical matter, the best inflation rate for an investor, it's the monetary inflation rate, the rate at which the supply of money is expanding.
When Saylor was studying the financial system in 2020, he noticed that the speed at which dollars were losing value was increasing. In this environment, Saylor knew that convertible notes would provide a comfortable middle ground for many investors who want to get out of cash, but don't have the balls to go all in on Bitcoin or commodities. To a note holder and a shareholder, there's 3 potential features. If the stock skyrockets, which it did, the note holders can choose to exchange their notes for shares at a profit, whereas the shareholder can sell their shares at a profit. Both good outcomes. If the stock crashes, the note holders don't need to worry, since the interest payments they receive are predetermined and unaffected by the stock price. But the shareholders would be directly affected by the falling value of their assets. And if the company goes bankrupt and has to sell all their assets, note holders take priority over shareholders. If the company has more debt than it has assets, note holders may end up still getting repaid something, while the shareholders are left in the dust. All of these benefits, combined with the pervasive desire to get out of dollars, is what enables Saylor to get paid to borrow money. This is the exploit, and it's fucking brilliant. How has this all worked out for MicroStrategy? Well, just take a look at their stock price since this whole shebang began. Since the floodgates opened with MicroStrategy, publicly traded companies have been popping up everywhere, all putting Bitcoin on their balance sheets. Tesla, Galaxy Digital, Marathon, Block, they all officially hold Bitcoin now. Oh, and that last one, Block, its founder, who also invented Twitter, by the way, announced they'll be buying Bitcoin indefinitely.
For me, that Bitcoin changes absolutely everything.
The financial system uses inflation to force you to make purchasing decisions, like a game of musical chairs. But in return, it punishes forward-thinking savers of the currency while rewarding short-term thinking and impatience. Or as Saylor puts it,
people that use fiat currency as a store of value, there's a name for them. We call them poor.
But Bitcoin is finite by nature. There will only be 21 million. And if you want to create new ones, you can't just fire up the printer like Jerome and one of the boys on a Wednesday night. You actually have to use real-world resources to find and create new ones. Saylor's strategy is simple. Sell the money that can be printed on a dime for the money that's provably scarce till the end of time. Saylor is the first person to explicitly adopt this mentality, and he's not even trying to keep it a secret. Hell, he hosts a conference every year to literally go over this exact strategy. But what happens when it's not just him doing this? You and I can't draft up debt notes and stock up on Bitcoin. But you know who can? Foreign governments, family offices, Saudi princes. We might not like billionaires and royals exploiting a system to scoop up Bitcoin. But the reality is, every government currency fails eventually. And the first people to get on the life raft of a sinking ship are those who know where the exit doors are.
You remember what I told you about the boat?
The reason dynasties last hundreds of years and most currencies only last dozens is because those dynasties spend every waking hour figuring out how to preserve the value of their work. You might not like how quick Saylor and billionaires like him are so rapidly buying up Bitcoin.
Shouldn't you leave some for the other guests, Eddie?
But they see a reality that is visible to any class or net worth. Today's monetary system is broken, and Bitcoin is the first life raft from that failing system that doesn't come with strings attached. The question isn't if you or anyone will get Bitcoin. The question is when you choose to or when you have to. So while the riptide of currency debasement still forces people to swim upstream just to stay afloat, now we have a riverbank. It's called Bitcoin, and it changes everything.
How do you sleep at night with that kind of fluctuation?
You just got to have a mission, right? Yeah, you got to have a mission in your life. So in this particular case, my view on Bitcoin is the reason to do it is because it represents freedom and sovereignty, truth, integrity, and hope for the world. And that being the case, it's going to outlast all of us.